Alright, folks, welcome back to Boss Economics World, the only show that treats the global economy like the high-stakes, black comedy reality show it truly is. Grab your popcorn, pour something strong, and for God's sake, check the stop-loss orders on your portfolio, because the adults in Washington are once again playing with fiscal fire, and they've decided to use the US Treasury as a can of gasoline. It's October 1st, 2025. While you were sleeping, dreaming of a world with stable interest rates and competent governance, bless your innocent hearts, Congress has done what it does best, absolutely nothing. They've blown past the funding deadline, triggering another government shutdown. This isn't your garden variety, 2013-era shutdown over a healthcare website. Oh no, that was amateur hour. This is the Super Bowl of political malpractice, the third installment under the Trump administration, and it comes with some, let's call them innovative new features. Let's break down this masterpiece of self-sabotage, starting from the immediate, surface-level carnage and drilling down to the systemic rot it exposes. First, the basics. When the government shuts down, the White House's Office of Management and Budget sends out the memo that basically says, pencils down, everyone. Non-essential services grind to a halt. This means national parks are closed. Sorry, your family trip to Yellowstone is now a poignant lesson in political dysfunction. It means your passport application goes into a black hole. But most importantly, it means people stop getting paid. We're looking at an estimated 750,000 federal workers being furloughed. Let's be clear, furloughed is a polite, bureaucratic term for sent home without a paycheck for an indefinite period. These aren't faceless bureaucrats in a DC swamp. They are IT specialists, food safety inspectors, scientists at the NIH, and administrative staff in every corner of the country. They have mortgages, car payments, and kids who, believe it or not, require food on a daily basis. The immediate economic data point here is the unemployment rate. Bloomberg Economics is already forecasting a spike from a respectable 4.3% to as high as 4.7% if this farce lasts 3 weeks. Why? Because hundreds of thousands of people are suddenly, technically, unemployed. This isn't an economic shock from a housing bubble or a global pandemic. This is a wound stabbed into the economy by the very people elected to manage it. It's like a pilot shutting off the engines mid-flight to argue with the co-pilot about the in-flight movie. Now, the old playbook says most of this economic damage gets clawed back. The Congressional Budget Office, Washington's official team of buzzkills, looked at the 2018 to 2019 shutdown, the longest in history at 5 weeks. They found that of the $11 billion in lost economic output, about $3 billion, or nearly 30%, was gone forever. That's a permanent loss of productivity. Services not rendered, contracts not fulfilled, small businesses that rely on government workers as customers seeing their revenue evaporate. Think about the delis, the dry cleaners, the coffee shops around federal buildings in cities like DC, Denver, and Atlanta. For them, a shutdown is a localized, government-induced recession. But hold on, because this time, it's different. This is where the 2025 edition gets its spicy new flavor. Enter the twist. President Trump, never one for subtlety or tradition, isn't just talking about a temporary furlough. He's openly suggesting his administration will use the shutdown as a smokescreen to conduct mass layoffs. This is a paradigm shift. This moves a government shutdown from a temporary liquidity crisis for federal workers to a permanent, structural shock to the labor market. This isn't just about trimming the fat, it's about amputating a limb with a rusty saw. The economic consequences are magnified exponentially. Consumer confidence, already fragile, would plummet. The permanent loss of income for tens, maybe hundreds of thousands of people, creates a negative feedback loop. They stop spending, which hurts businesses, which then lay off their own workers. The temporary 0.4% spike in unemployment could become a permanent, grinding increase. And this is where the story gets truly bizarre. These potential layoffs are being stacked on top of an already hemorrhaging federal workforce. You see that reference to Elon Musk's Doge effort? Let's assume Doge stands for Department of Government Efficiency, a Musk-led initiative to bring his chaotic, hardcore Twitter/X management style to the federal bureaucracy. The result? Roughly 150,000 workers have already taken early retirement or deferred resignation packages as of October 1st. This is the run government like a business fallacy on steroids. A business can slash 20% of its workforce to please Wall Street for a quarter. A government provides essential, often unprofitable, services. When you lose experienced civil servants, you lose institutional knowledge. You lose the people who know how to manage a pandemic response, how to process social security checks efficiently, and how to keep the national airspace safe. This brain drain creates long-term inefficiencies and risks that dwarf any short-term payroll savings. Combine the Musk-induced exodus with Trump's layoff threats, and you get a perfect storm for a regional recession, starting in the Washington, D.C. metro area. The DMV economy is heavily dependent on the federal government. According to the Bureau of Economic Analysis, the federal government directly accounts for roughly one-third of the D.C. area's GDP. A sudden, massive contraction in that sector would be catastrophic, with ripple effects spreading nationwide. We are talking about a potential housing crisis in one of the nation's most stable real estate markets as a flood of laid-off workers are forced to sell their homes. Now, let's zoom out.
What does this whole fiasco say about the health of the American economic and political system? It's a 5-alarm fire. Symptom 1, the data blackout. This is the part that should terrify anyone in finance.
A shutdown means the agencies that produce our core economic data, the Bureau of Labor Statistics, the Census Bureau, the Bureau of Economic Analysis, go dark. The crucial BLS jobs report, the inflation data, retail sales numbers, they all just stop. Think about the Federal Reserve. Their entire mandate, maximum employment and stable prices, relies on this data. In 2025, they could be in the middle of a delicate dance, either still fighting the ghost of 2022's inflation or trying to engineer a soft landing to avoid a recession. Now, they have to do it blindfolded. It's like asking a surgeon to perform open-heart surgery after you've smashed all the monitors. The risk of a catastrophic policy error, hiking rates into an oncoming recession, or cutting too late to stop one is skyrockets. The market hates uncertainty more than anything, and Washington is currently manufacturing uncertainty at an industrial scale. The VIX, the market's fear index, is likely going to the moon. Symptom 2, the weaponization of the budget. This is no longer about policy disagreements. It's about a complete breakdown in the basic functioning of government. The funding deadline has become a biannual hostage situation. One party, or even a faction within a party, can hold the entire U.S. economy captive to extract concessions. Today, the deadlock is over Obamacare subsidies. Tomorrow, it could be anything. This creates staggering levels of political and economic instability. How can a business make a 5-year investment plan when it doesn't know if the government will even be open in 5 months? This constant brinkmanship acts as a tax on the entire economy, raising the risk premium for everything. Symptom 3, the fiscal absurdity. Let's not forget the backdrop. This shutdown is happening at a time when U.S. national debt is likely well north of $35 trillion. The CBO's long-term budget outlook from 2024 already projected that interest payments on the debt would exceed defense spending. In a higher rate environment, every political stunt that shakes investor confidence risks driving up the yields on U.S. treasuries. This means the cost for the U.S. to borrow money goes up, which crowds out spending on everything else: infrastructure, research, defense, and spirals the debt even higher. Arguing over a few billion in subsidies while the interest on our national credit card is exploding is like fighting over the price of a deck chair on the Titanic. Finally, this isn't just a domestic soap opera. The world is watching. For decades, the U.S. economy has been anchored by the full faith and credit of the United States government and the U.S. dollar's status as the world's reserve currency. This status gives us what former French President Valéry Giscard d'Estaing called an exorbitant privilege: we can borrow cheaply in our own currency. Every shutdown, every debt ceiling crisis, every act of performative political self-destruction chips away at that foundation. It signals to the world that America is not a reliable partner. It tells our allies they can't count on us and our adversaries that we are chaotic and internally divided. Nations like China are already actively trying to build alternative financial systems to reduce their dependence on the dollar. They are promoting the digital yuan, signing trade deals in local currencies, and building parallel institutions to the IMF and World Bank. Our political dysfunction is the single best marketing campaign for their efforts. The irony of using a Doge effort to reform the government while the government's instability threatens the dollar's global dominance is so thick you could cut it with a knife. The meme coin that was a joke becomes a symbol for a government that is turning into one. So who wins in this shutdown showdown 2025? It's not the Republicans or the Democrats. Both parties look feckless and obsessed with scoring political points for the 2026 midterms while the economy burns. Blaming the other side is a tired script that the public has seen too many times. It's not the American people. They get furloughs, closed parks, delayed services, and the gut-wrenching anxiety that comes from living in a country whose leadership is fundamentally unstable. It's not even Trump or Musk, really. The chaos they unleash might serve a short-term political goal or satisfy a disruptive impulse, but the long-term damage to the institutions they are reforming is immense and difficult to repair. The only winners here are volatility, uncertainty, and our geopolitical rivals. Traders who bet on the VIX will make a killing. China and Russia will get a propaganda goldmine, pointing to the chaos in Washington as proof of the failure of democratic capitalism. This isn't just another shutdown. It's an evolution. It's the convergence of political polarization, fiscal irresponsibility, and a new, nihilistic brand of disruption that seeks to break things without a coherent plan to rebuild them. The fight over healthcare subsidies is just the trigger. The real issue is that the basic consensus required for a complex society to function is fracturing before our very eyes. The market abhors a vacuum, but politicians, it seems, absolutely love a good dumpster fire. And they've just thrown the entire federal budget on the pyre. My advice? Diversify your assets, maybe buy some gold, and keep an eye on the exit. Because when the people in charge are this reckless, the only rational response is to expect the worst. Stay solvent, my friends.